Shopify just reported some lovely earnings for us this morning. We're going to take a look at it because these are earnings I was very hyped for. I was super excited to see what this company could offer. And, well, we will take a look at it for sure. So, I anticipated very good things, and needless to say, Shopify definitely hit those marks. Quarter one non-GAAP EPS profitable. GAAP EPS negative 27 cents. Beat by 50 cents, though. I mean, that's a very big GAAP EPS beat. Obviously, I wasn't expecting profit for this company because they're not really at that point yet, but once they transition to profitability, clearly they can ramp it up heavy. Revenue of $470 million, up nearly 50% year over year, beat by $27 million. Now, this doesn't shock me at all. I anticipated a massive quarter for this company, and next quarter, guess what? It's going to be even larger. It's going to be even bigger next quarter. Gross merchandise volume was reported at 17.4 billion versus the consensus of 16.83 billion and 11.9 billion a year ago. One thing to mention again, you know my thing about market caps. This is a company trading at a market cap of 81.5 billion, and with revenue of this quantity, we're talking about maybe $2 billion annual revenue for this company. If the growth continues, they're going to be looking more like $3 billion, to be fair, $3 to $4 billion. And they are trading at a market cap of 81. Am I the only one that thinks that's a little crazy? Year to date, this stock has nearly freaking doubled. I mean, I get it. This is a good environment for them, and the future looks very bright. But if we're talking about valuation again, if we go strictly off value, this stock does not deserve to be anywhere near where it's at right now. But again, it's all because of the hype. If it's a company you believe in the future, if you believe this, Shopify here is going to be the next superpower in terms of, it's going to be up there with Google in the future. Well, if you invest at it at this level, I mean, that's entirely you. But if we're talking about oh gosh, valuation here, I mean, Facebook's trading at 598 billion, yet their annualized revenue is, closer to 300 billion, to be fair. But let's not be rude. Let's just take a look here. We'll take a look at their earnings in just a second. Subscription solutions revenue grew 34%, driven primarily by growth in monthly recurring revenue. Good stuff for them. People subscribe to their service. Largely as a result of an increase in number of merchants joining the Shopify platform, strong app growth, and Shopify Plus variable platform fee revenue growth. Merchant solutions grew 57%, driven by the growth of GMV. GMV increased 46% to, that's just merchandise volume, just so you know, general merchandise volume. So that's just the kind of business that's being done online. They don't make obviously all the money off that, but these are the transactions that were done. $17 billion worth of goods. Pretty crazy. And the company has suspended previous announced guidance. So, and I think for them it's actually going to be in a good way. They're suspending it in a positive way as opposed to what most companies are doing in a negative way because they don't know. Here they don't know because I think it's going to be better than they expected. So, obviously they're very, very excited about this. They're always big on their little earnings slide, but their market, you see from the basic platform, which is the $29 a month, they're focused on entrepreneurs. Just their normal Shopify brand here is kind of in the middle, from small businesses to entrepreneurs. The advanced is more geared towards the higher end of small businesses, and the Shopify Plus is meant for larger brands. We're talking, big retailers here. And this is $2,000 plus per month. And a lot of companies do use Shopify Plus, to be 100% honest. And obviously with those rates, it's definitely meant for big brands. One might maybe ask why in the world they flip their pyramid upside down. Well, I respect them for it. They're being different. They're a hipster company. Their total addressable market is somewhere around $78 billion according to them. which would be pretty cool. Anyone who wants to make money from their site, then their site, then they pay for it. Okay. Anyways, anyone who wants to make more money from their site, then they pay for it. All right, I misread it. Don't call me a loser, but I did misread it. It makes sense. I thought they typoed. But 78 billion potential is what they're talking about. That'd be crazy. Very crazy. So from acquisitions, typically the smaller ones are all word of mouth. Then search engines, digital advertising, blogs, content marketing, global events, partners and affiliates, and Shopify plus sales representatives. So they do have people who actually sell Shopify to these big brands. That's a department they have. So obviously entrepreneurs are big about this. In the light of this pandemic, leading to the closure of non-essential retail stores, Lila, I guess is her name, leveraged Shopify's multi-channel capabilities, gift card feature, and Shopify payments to run her online store. Pretty cool. From small businesses, you talk about Fragola. That looks disgusting, whatever they're making. I don't know about that. Fresh organic meals for babies. Oh, that's why it looks disgusting. It's baby food. Fragola, what the crap kind of a name is that? Fragola started using Shopify's gift card capability for donations during the pandemic to help send free boxes of food to families in need. That's pretty cool. Fragola has used Spotify shipping, Spotify payments, and our multi-channel business capabilities to run the business. Pretty exciting. See, from large brands, they're talking about big stuff. Heineken moved from medium brand to large brand. Lisa moved from medium to large, small bit, and then Jameson as well. But large brands using them, we got KitchenAid, Cirque du Soleil. You wouldn't believe it, but they do. KitchenAid, Fashion Nova. Fiji is involved in this. Lindt, that's right. You love their chocolate. They're good. Staples, D-Link. Ooh, baby. Heinz uses, that's right. Heinz uses Spotify, or Shopify. Ooh, probably Spotify too. Gymshark and General Mills. I mean, those are big consumer staple brands. You're talking about Kraft Heinz and General Mills. Big brands here. And Staples. I mean, Staples, you can't knock them. You need office supplies now and then. Maybe not in the future, but sometimes you click out of it because that's what you do. So they have 4,100 apps that are extending product capabilities. 26,400 agencies and web designers that are they've referred at least one merchant to Shopify in the last 12 months, I should say. I'm flubbing words like no one's business. They're a growth-minded culture. They're in Canada's top 100 employers of 2020. This guy in this picture has a big honker, I must say. The nose is large on that one. But they recruit talented, deeply caring individuals. Hack Days as an individual, as an innovative engine. I'm really struggling this one. They invest heavily in personal growth and development and global reach. If we look at the numbers here, they have a strong competitive market position. So overall, so as far as the U.S. Retail e-commerce sales, Shopify's up there in terms of just general merchandising volume. So 5.9% of the market. Obviously, Amazon takes a major portion of it. Now, obviously, this isn't updated either because Wayfair's jumped up a little bit. Walmart would have jumped up a little bit, but cool for them. I mean, it's cool for them. Consistent revenue growth, as you see, year over year. This is massive growth overall considered. I mean, the company making last year they made $1.5 billion. This year they're trending to make close to $2.5 to $3 billion. Pretty exciting for them. Quarter over quarter, you see 47% growth. I mean, or year over year, I should say. Just massive. And as far as annual growth year over year, 47% as well. So annualized growth rate of 50% is just massive. It's just massive, all things considered. You do see a slight leveling out here, just a slight one. And I think you will, obviously. You can't expect 50% growth rate to continue. But as far as their growth perspective, monthly recurring revenue continues to grow its percentage. Monthly recurring revenue on core seems to grow as well. But Shopify Plus is growing too. Shoot. Apps, themes, domains, Shopify Plus platform fee revenue also growing as well. Just overall total, just good stuff going on. General merchandising volume growth has shot up quite a bit in 2019, up 46% year over year if you're talking about quarters, up 49% if you're talking about for the full year. Pretty exciting. Adjusted gross profit, which is again is adjusted, so we're talking about the GAAP or the non-GAAP version of it. So not necessarily fair 100% profit, but quarter one, you see 263.8 million, up 43% year over year. 2020 investments, they're actually decreasing the amount they're spending, which is good for profit. They're limiting expenses pretty well. They're doing a good job. Obviously here's this flywheel. As far as the tailwinds are concerned, there's a rise of self-employment. People who lost their jobs or they're transitioning their small businesses more online might do more self-employment, and they'll grow e-commerce, and they might use Shopify for that. They have a good market ahead of them. Their opportunities are international, share of the wallet, and machine learning. They want more merchants, more general merchandise volume, and more channels of partners, obviously, because that's how they make money. So obviously there's a vast ecosystem. They have a lot going on with this company. And then if they show me what they want, they don't show me what they want. So sometimes you have to go searching, okay? You don't always want to have to go searching, but sometimes you have to go searching. So I can't even type today either. It's a rough one, I gotta tell you. We gotta go searching for that balance sheet because it's what we really want to see. Let's scroll down on this press release and take a look. Obviously, it's a Canadian company, so I'm sorry, guys. I don't mean to be rude to them. So current assets that's right, cash equivalents of $969 million. That's versus last quarter of $649 million. So they've definitely rose that quite a bit. But you see in marketable securities, they clearly sold off some of those. So overall, from a total current assets perspective, it didn't really change year over year or quarter over quarter. $2.7 billion for this company. Total assets on this company as well of $3.4 billion. And overall liabilities only nothing too crazy. So overall shareholder deficit, or really equity, there's no deficit here, shareholder equity of $3 billion. This company's got a very good balance sheet. Balance sheet's beautiful. I really like where this company's headed. I really do. My only concern, again, is valuation. I mean, the valuation on this company doesn't make sense at these points. It just doesn't. I mean, I get it, but we're talking about this valuation won't belong to this company for another, 5 years probably. If we're being fair, 5 years. Probably further than that, but I just want to be generous. I just don't know where the point is to get in on this stock right now. It just doesn't seem, it's crazy. I would say values in the 300s were fair, and I think they might still be fair. But since then, we're talking about it's just up massively. I'd say somewhere in the 300s, below 400 is the only fair value for this company right now if you wanted to get in. I don't know if it'll reach those places, but this company is so just incredibly overvalued. It is crazy. I love what the company's doing. I just don't know if there's value to be had gaining this stock besides entirely the speculation from investors, which again, investors are irrational right now. Just this stock is crazy. That's all I can tell you. They're going to have a better quarter next quarter too even, so just mention that. This stock could go up big even still. I don't know what it does in the meantime, but it's going to go up as of next quarter's earnings. I'm just going to tell you that right now. So think about maybe a long-term call option. I don't know what that looks like, but I don't think I'm going to partake in those because I think it's unsure necessarily what's going to happen in the interim period. So hope you enjoyed.